Let us do question number 4. Y carries on his business an analysis of his trading and profit loss account for the year ended 31st March 2018 revealed that the following information. The net profit was 11,20,000. Following incomes were credited in the profit loss account. A. Dividend from UTI, rupees 22,000. B. Interest on debentures, rupees 17,500. C. Winning from races, rupees 15,000. Third, it was found that some stocks were omitted to be included in both the opening and closing stocks, the value of which were opening stock rupees 8,000 and closing stock was rupees 12,000. And the fourth point says that rupees 1 lakh was debited to profit loss account being contribution to a university approved and notified under section 35(1)(2). Fifth number point says that salary includes rupees 20,000 paid to his brother, which is unreasonable to the extent of rupees 2,500. Point number 6 says advertisement expenses include 15 gift packets of dry fruits costing rupees 1,000 per packet presented to important customers. Point number 7, total expenses on car was rupees 78,000. The car was used both for business and personal purposes. 3/4 is for the business purpose. Point number 8, miscellaneous expenses included rupees 30,000 paid to A&M Company to a good transport operator in cash on 31st January 2018 for distribution of company's product to the warehouses. Point number 9, depreciation debited in the books was rupees 55,000. Depreciation allowed as per income tax rules 1962 was rupees 50,000. Let's come to point number 10. There were drawings of rupees 10,000 and point number 11 says investment in national savings certificates rupees 15,000. Compute the total income of Mr. Y for the assessment year 2018-19. Now let us solve this question. First we'll compute the profits and gains of business or profession. Now we take first of all the net profit as per the profit loss account. The figure is 11,20,000. Now we add some expenses which are debited to profit loss account but not allowable as deduction. First would be salary paid to his brother, which will be disallowed to the extent considered unreasonable under section 40A subsection 2, which is 2,500. Motor car expenses attributable to personal use not allowed. Now the total expenses were 78,000 and 1/4 was personal and 3/4 was official. So we disallow the 19,500 which have been debited to profit account because it's a personal expense in nature. Then depreciation which is debited in the books of account which is not as per the income tax rules. So we will add back. So 55,000 rupees depreciation has been added back because it is not as per the income tax rules. Now drawings not allowable since it is in personal nature. So 10,000 depreciation, the drawings will also be added. Now he has made some investment in national savings certificates which have been debited to profit loss account. So it needs to be added up. 15,000 was the investment in national savings certificates. So overall it comes to 1,02,000. So these are the expenses which have been debited to profit loss account but they are not allowable as deduction. So the net profit as per the profit loss now stands at 12,22,000. Now here a point should be noted that advertisement expenses of revenue nature, namely gifts of dry fruits to important customer, is incurred wholly and exclusively for the business purpose. Hence the same is allowable as deduction under section 37. Now in the question it is given that he has given some dry fruits as gifts to his important customers and this is treated as a business expenditure and it will be allowed as a deduction under section 37. Now we are going to make adjustment for the closing stock which has been omitted in the income and expenditure account. So we will add the understatement of closing stock which is 12,000. Now this is a closing stock which was lying with him since he has not included. Now it will be added and it will boost his net profit. Then we will be reducing the opening stock of 8,000 because it was being consumed during the year. We'll believe that, and it has to be reduced because it will be an expense which has not been considered in the trading and profit loss account. Then we will make further reduction or count of contribution to a university which is approved and notified under section 35(1), which is eligible for a weighted deduction of 150%. Since the actual contribution 100% has been debited to profit loss account, additional 50% has to be deducted. So we will take a reduction of 50,000 from his profits. So it will come to 11,76,000. Now there are incomes which have been credited to profit loss account, but they are not taxable as business income. We know that income from UTI would be classified as income from other sources, so it will be also reduced. Now at the same time we know that it is exempt under section 1035. Then interest on debentures. Now they are taxable under the head income from other sources. So 17,500 will be also reduced from his income, which has been shown as an income in profit loss account. Winning from races. Now this is also taxable under the head income from other sources. So this will be also reduced, 15,000. Less the depreciation which is allowable under the income tax rules 1962 is rupees 50,000, and this is from the question itself, where it has been written that 50,000 is a depreciation which is allowable under the income tax. So we will reduce that now, since we have added earlier the depreciation which is debited to profit loss account, which was not as per the income tax rules. So now we will be reducing which is eligible. Now some further points will be noted here, that he has made a cash payment exceeding rupees 10,000 to A&M Company, which is a good transport operator. Now here the disallowance under section 40A subsection 3 is not attracted because the limit has been increased, that in case of payment made for plying, hiring or leasing good carriages, an increased limit of 35,000 is applicable. So payment up to 35,000 can be made in cash without attracting disallowance under section 40A subsection 3. Now further, he has made some drawings and he has also made some investment in national savings certificates. Since it has been included in the profit loss account, the same has been added back to arrive at the business income. Now further, point number 9 of the question, it has been given that depreciation as per the income tax rules in 1962 is 50,000. So it has been assumed that in the said figure, 50,000 rupees is only the proportional depreciation, which is 75% for business purpose, and has been included in respect of motor car. So here what it says is that the 50,000 depreciation, which is as per the income tax rules 1962, is in fact equivalent to 75%. And so we have actually reduced 50,000 totally from his profits. So this is the assumption here. So now let's do the computation of income from other sources. So interest on debentures is rupees 17,500 and winning from races is rupees 15,500. So altogether income from other sources is 32,500. Now here we have assumed that interest on debenture and winning from races represents a gross amount, that is without received plus amount, that is amount received plus tax deducted at source. So that's why we have shown the gross amount here. So now let's do the computation of total income of Mr. Y for the assessment year 2018-19. Now the profits and gains of business or profession are rupees 10,71,500, which we calculated earlier. Then we will also include income from other sources, which we have computed in our earlier part of our explanation. So 32,500 will be the income from other sources. So put together the gross total income will be 11,04,000. Now he will be allowed a deduction under section 80C because he has made an investment in national savings certificates and he has invested 15,000, and under 80C we know the deduction up to 1,50,000 are allowed. So which means the total income will now be 10,89,000.